Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for April 24th, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. We use a trading plan to keep us focused and disciplined on what's going on in the market as we look at our existing trades and as we scan for new trades. And it also cuts down on our research time so that we have time to spend with our family. So the week that was, as we said last week, any pullback that we've had in the market has been followed up with buyers. So, even we participated a couple weeks ago, maybe a month ago, about the market needs to go down, and certainly the technicals are saying that. But again, what we said last week, and this is what everybody needs to understand, is that every pullback has been bought by buying. So yes, should the market go down? Probably. Would it be healthy for the market? Probably. But until the trend is broken, you still have to buy the pullbacks. So, what did we have last week that really thought could push the market down? And we said, how would this happen over the weekend from Friday to Monday? And that was Friday's Goldman Sachs news about the lawsuit from the SEC. But for the most part, the market put that behind them and continued to resume this 13-month rally. The sectors were up, led by energy and consumer discretionary. The economic data for the week really didn't have that much impact on the market at all. We did have a little quick impact, continuation of this Greece news. First, I think on Tuesday or Wednesday, the EU released their budget, and Greece's debt came in higher than expected, and we did get a little pullback off of that. But then yesterday, Friday, Greece officially requested the relief package, and the market certainly did respond nice to that. As we know, the dollar goes down because the euros are going up, and the market responded well to that. Corporate news helped keep the market positive for the week. We had great earnings from Citigroup on Monday. IBM, Apple blew out the reports on Tuesday after the market. Even Microsoft had good earnings. Amazon had good earnings. But the question is, we didn't get huge thrust from these earnings. Yes, the market was up this week, but nothing gigantic, nothing out of the norm. So is the market beginning to expect good earnings instead of being surprised by them, as they were last week and even as the earnings seasons kicked off? Now it's starting to become commonplace. And so, I'm not sure we're getting the same catalyst of good earnings. So I think the market's come commonplace. This week, Citigroup, AT&T, Wells Fargo missed, but nothing that great. So what do we have next week? Well, we finally may have some economic news to impact the market, and that is on Wednesday with the FOMC rate decision. When are they going to raise rates? As again, we're talking about a 13-month rally, even though it's somewhat of a jobless recovery rally. Will the FOMC begin to raise their rates? Would they put something in their language that's going to indicate that they're going to raise rates? As far as Monday is concerned, we don't really have anything that's going to move the market on Monday. No economic data, no real earnings that can move the market. Sohu is the Chinese Google, along with Baidu. And this week we do have Ford and some companies, but I think people are going to be really pausing until the FOMC data comes out on Wednesday. What we can gather from our market internals is, first and foremost, our volume continues to be low. There's a volume on the NYSE and a volume on the NASDAQ. So that's still the case for 2010. The other thing we're going to see is on this put-call ratio. And the thing that's interesting is, you remember last week we had, of course, our Goldman Sachs news on Friday. And then you can see that we got up to 0.91. So that means the put-call ratio was almost 1-to-1, meaning more the people buying puts, people buying calls were equal. But then as we went on in the week, it started going down, so that means less puts were being bought on the option side. So that could mean that people feel more comfortable with where the market is. And finally, when we look at VIX here, we can see that we immediately came off of our 18, down to 17, back down to 16. So to really see the panic that we need to profit from, we really need to see VIX jump up into the 20s. We haven't seen 20s in a while. Really, 30s is what's really going to push the market down. But our VIX continues to be low in a nice range that we're not seeing that follow through in the internals for this push lower. So again, all push downs, all pullbacks in this rally has been followed by buying. Here we can see the Dow Jones on the daily chart. And you know, we can see at least we're close to the average volume. Volume hasn't been great, but we did get a little pickup on Thursday and Friday. We can also see on the daily chart the 11,000 support that was formed at the beginning of April, and resistance in the beginning, and then became support as we move higher. But overall, you know, what can we say? I mean, that's a great chart. Again, pullbacks, the 10 moving average are certainly viable. If we ever get to the 20 moving average, that's certainly viable also. We'll get to targets when we go to our monthly charts because this is such a bullish chart. Let's switch over to the S&P 500. On the S&P 500, we can see that the volume has picked up over the past week. So that's certainly good. And what has happened over the past week or so? Earnings. So we can see that volume has picked up. Still low for the year, but it has picked up. And we can also see the support of 1175 coming into April. And now you could probably put it up here around 1200 as we move higher. We see more of a leveling off here the past week or so as we move higher. But again, we'll use the monthly chart to use our support and resistance targets. So let's finally switch over to the NASDAQ. And once again, we see just a great chart. 10 moving average certainly acting as support. Pullbacks there are considered viable. Again, all pullbacks eventually were bought. So until we break the trend, until we come down to this 20 average and move it, you gotta buy the pullbacks. As we switch over to the monthly chart, we can see, you know, just how great this 13-month rally has really been. We can see, as we talked about for a couple months, the psychological boost of getting above the 50-moving average. That's certainly panning out. And for a while, we were talking about this 1100 range as being resistance and support. We've finally broken that in the month of April. And so we got a little action going on up here. And that puts us at 1382, 1375. We got a little action going on in here, 1350, 1375. So that would be my initial target. Certainly taking out the majority of this push down is certainly very bullish. But when we switch over to the NASDAQ, we're like, wow. I mean, we have taken back the whole thing. Here is the beginning of the push down, and the month of April has taken that out. And so we're up here. We had a little action going on here, and that's where we're at. So this 2500 messes with some resistance that we saw here in 07, a little support, these wicks. So this 25, 26 level is resistance. So if the NASDAQ continues to go higher, again, we got to look at this 26, 2700 level if we break where we are now. So if we continue to go higher, 2700, 26, the high 2600 is my target. But the NASDAQ clearly shows you how bullish the market really is. Let's finish off with the S&P 500 on the monthly charts. And again, we can see the bullishness of closing above the 50-moving average. Initially, we were using this level here, this 1242, 1240 as our target. So we're about 30 points away from that, 25 points away from that. So we'll continue to use that as our target. And our support will be around this 1212 right below it. So we're... maybe I'll go back to the 50-moving average, you know, as our hard support. As long as we stay above that, we are fine. So again, our target, initial target, is right above where we're at this 1240 range. Taking a quick look at sectors, you're going to be hard-pressed to find a sector that's not bullish right now. One of our leading sectors is dow-jones transport. You can see how great that looks. A sector that might take us higher is energy. You know, that's our oil. Oil, $84, $85 a barrel. Sector looks good. Looks like it's breaking higher. Another sector that could take us higher is financials. Look at that. Look at banking looking good. Even some of the investing sectors look good. Also, last week we talked about metals. Looks great. Gold, take a look at that. We dropped down. Manufacturing looks great. Resorts, discretionary spending, retail, even look at real estate. Take a look at that. coming down to computers. Again, discretionary spending looking good, and the internet. So you're going to be hard pressed to find a sector that's not bullish. So let's continue to buy the pullbacks. We're going to have to cut this video short because of time allotted by YouTube and other sites. You know about our partners, Great Futures Trading Room, Broker, charting platform, and a trading plan for you. But go to our podcast to get the full version, get the other segments that are not in this version of the video. Thanks, guys. You can lose your money, trade at your own risk.